Hey guys, welcome back here. Joe from 9 to 5ers, and we're going to be talking about how to raise your credit score. And this is going from I don't have any credit all the way up to excellent credit, that 800, that 850 area where we all want to be. So just a quick disclosure here, guys. Just use this information for educational purposes only. If you have anything beyond that, seek out professional advice with an accountant or financial advisor or an attorney, whatever you would need. But just use this for educational purposes only. That's what we're here for. All right, so just a quick overview of what we're going to be talking about in this video. Why should I even care about credit? Who cares, right? What is a good credit score? How do I grow my credit, and what impacts my score? And how do I get started today? How can we get you off and running right after you watch this video? So why should you care about your credit? I'm not going to buy anything that I can't pay for cash. Okay, great. Well, credit is slowly seeping into different parts of our lives, and it is affecting more and more of how we interact in society. And it does affect more than just mortgage loans and cars. So let's just take it. If you're looking to get a professional job, they are going to run your credit score, and that could potentially mean you getting the job or not getting the job. It might be a deciding factor against you and another candidate. If someone has a better credit score than you, they are considered a more stable person and a more trustworthy person, so to speak. If you're renting and you have a low credit score, it's going to tell the property manager about your financial past, and your past a lot of times tends to predict your future. Not always, but without being able to predict the future, that's what property managers use. And as a property manager myself, I definitely do a full credit report on every single person that I pick up that is an applicant, and I drill down and look at their credit reports. Good credit is going to get you to the front of the line when the property manager uses your credit score, and it's going to equal a lower deposit because there's less of a risk for you not to pay your rent. If you have bad credit, they might ask you to pay a double deposit, or they might say, hey, listen, I want first and last month's rent, and you always got to pay 2 months ahead all the time. That is way more costly than someone that just has to pay a single deposit and doesn't have to pay ahead. And that's if you do get accepted. A lot of times, if you have bad credit and it says right there on the application, any score below this number, you're automatic fail, you're just wasting your time. So now let's get down to what it normally is used for, and that's mortgages and car loans. So you're going to pay for good credit one way or another. And what I mean by that is, like, let's say you have maybe $100 here, $200 here, $500 here, maybe past that's something that's gone into collection. Maybe it's a medical debt, or maybe it's just a car that you didn't make a couple payments on, and it went into collections and they repoed it, and it's still on your credit report. Well, if you have bad credit, and let's just say that you're going to get 2% difference on a mortgage for a $300,000 house, that's going to cost you over $100,000 more in interest over the life of a 30-year loan. And that's just 2% higher. That, I think, is pretty crazy. And having $5,000 or $10,000 of back credit card debt and it's destroying your credit, you're going to pay for that one way or another. And paying off that $10,000 worth of credit card debt might be the cheaper of the two options. So what is a good credit score? Well, an excellent is going to be in the 800 to 850 range. That's what we're all shooting for. That's what you want to have. And that's going to get you top tier rates. And you can also take a credit hit at this point and still get really, really good rates. If you're in an 820 and you drop to a 790 because something bad happened in your life, you can still qualify for almost everything. You can qualify for everything, and you're going to get really, really good rates. So that's you got a safety net there in the 800 to 850 range. Very good credit, you're still going to get awesome rates. You might get top tier rates, you might not, but you're still at the top, and you're going to be able to qualify for just about everything out there. I've never had anybody ask me that I need to have a credit score above 799. Good. Now this is your 670 to 739 range, and this is where the banks start to eyeball you for mortgages. And I've heard a lot of banks recently that are looking at the 680 as the minimum. And this is where this really starts to affect your life. Can you get a mortgage or not? Or do you have to continue to pay rent? This is the level where your life can alter one way or another pretty significantly. The fair credit score, you're looking at the 580 to 669. This is where you're going to be able to get a car loan or not get a car loan. And also, this is where, like I said before, a lot of rental property managers will not lend to someone that's below 580 because you have to do a lot of abuse to your credit score to get down to 580. And then poor is, I mean, your options are going to be really, really limited. And that goes for everything across the board. And this is where you don't want to be for sure. So, getting just to that 670 range is going to change your life significantly, going from a 300 to a 670. So how do you grow your credit? How do I do this? Let's say that you don't have any credit at all. You've only paid cash for everything your whole life. Maybe you're watching this and you're 18 years old and you can officially start trying to get credit. What do you do? Well, the easiest option is to go out and get what's called a secured credit card through a bank, your local bank. And to maybe get one of those, all you have to do is maybe set up a checking account or a savings account. So an example of a secured credit card is what their bank is going to do is they're going to be like, listen, you don't have credit and we don't know anything about you. You are a complete question mark to us whether we believe you're going to pay it back or not. So what we're going to do is you're going to deposit $300 into a savings account, and we're going to hold that money as collateral for this secured credit card. And this secured credit card is going to have a limit of $300. So if you pay it back, great. You're going to get your $300 back after the kind of like the period of, kind of vetting you. And if it doesn't, then, well, no big loss to us. We're still going to get our $300, and all we lost was a little tiny piece of plastic. So what you want to do is you want to make small, regular, monthly purchases. And when I say small, I mean it could be literally the size of a pack of gum. Like you can go to a store, buy Tic Tacs, go up there, swipe your credit card, and you now have $1 of debt on that credit card, and you just pay it off. You don't need to just blow out the credit card and spend the max every single time. And actually, hitting that upper limit is more detrimental than just paying, just getting $1 put on there, $2, $3, whatever, $5, $10 on there versus the upwards higher limit, the $250 or $300 range. And then just pay it off in full every single month. And you're looking to do this probably for about 4 to 12 months. And I know that's kind of a wide range, but all banks are different. And just ask them, how long do I have to use this secured credit card before I can get it unsecured? And they're going to give you a different answer. And banks are all over the map with their regulations, and it just depends on the weather. That's how they basically make their regulations, so to speak. So 4 to 12 months of you buying a pack of gum, paying it off, buying a pack of gum, paying it off, filling up your gas tank with your and paying it with your credit card, paying it off. And then they're going to be like, okay, this person is trustworthy with a small amount of money. So what we're going to do is we're going to allow them to get an unsecured credit card. An unsecured credit card is basically like there's no deposit backing it up. There's no collateral there. You have a credit card. And you can get this through your bank. They'll upgrade you to the next level. You can go through Visa, MasterCard, all those guys. And you want one that has some cash back or maybe some airline miles, but no fees. No fees to it. I mean, you're still going to get a very small limit here with your unsecured credit card, and you're going to want to continue all the good habits that you created in step 1 here. Once you get that secured credit card, you can just keep buying that pack of gum or filling up that gas tank and paying it off every single month. There's no reason to carry a balance. There's no reason to blow it up and go all the way up to the limit. What you're doing is you're creating a history of, I am a trustworthy borrower. So step 3 is to get more credit cards. Now, this comes with a warning because this is a lot of times where people can really go off the rails. It's hard to go off the rails in step 1 And if you have one credit card with a really, really low limit, it's hard to go off the rails too there. It's not impossible, but it's tough. If you start getting multiple credit cards, what you're doing is that you are accelerating your credit history and your credit utilization limit. Banks look at it like, if you have, let's say you have a credit card and the balance and the usable limit on it is $300. Okay. Well, if you use up 250 of those dollars, you've used up almost all of the available credit, and you are someone that carries a quote unquote high balance on your credit card compared to what the level is, like what the maximum amount is. Now, let's take another person that has a $30,000 limit and they turn the balance on it from $0 to $250. Well, they're still way under the 10% level of what they kind of use to gauge whether this person's overutilizing it or not. And what you're doing is you're allowed to use the credit card more often and purchase more expensive things without it being detrimental to your credit score. So just make sure that you try to stay under that 10% of the utilization. So 10% is just basically moving the decimal point over once. If you have a $1,000 limit, then don't go over $100. You have a $10,000 limit, then don't go over $1,000 every single month, and pay it off every single month. But this is where potentially people can go off the rails here. But if you use it properly and you build up a good habit, then what you can do is max out your utilization that you have, max out the points or the cash back that they give you, and also max out the credit history. So now you have credit history with maybe say 3 credit cards versus 1 credit card. And like I said before, just use the same process as you did in step 2. And this is going to grow your limits and your history. If you have a $1,000 limit on your credit card, and let's say 6 months goes by, you're going to get an email, you're going to get a mailer, and it's just going to say, hey, we increased your credit card limit to $1,500. You don't have to do anything, just let you know that we did it. That's because you are a good borrower and you pay back the credit, you pay back your balance every single time, and they like people that do that. Step 4 is to build your history. And unfortunately, the only way to do that is you just continuously, you have to let time go by. The calendar months have to tick by. Someone that has a year's worth of credit history, that perfect credit history is great. And that's that's a great borrower, but they're not going to be as good as someone that has a decade's worth of perfect payments on time. It's just, the calendar is the calendar, but that's how you build up your credit score. So what impacts my score? How do I change my score? How do I manipulate my score? How do I max out the ways that I can get that score up as high as I can? I want to get that 850 or that 800 as soon as I possibly can. Well, your payment history is the single biggest percentage out of anything, and that's 35%. So roughly a third of your credit score is you just making payments on time. That's a third of it, and that is huge. And you don't want to miss payments. And if you do miss a payment, then you want to get it paid quickly. And you want it to be one and done, and you want that missed payment to go back in the past as quickly as possible. But your payment history, the closer you are to perfect, the better your credit score is going to be. And that's where you want to stay. Perfection here is almost vital to getting that excellent credit card tier rating. Amount owed. So we talked about credit card utilization. So if the rule of thumb is to not go over 10% of the allowable credit that you have available to you. So like I said before, if you have a $10,000 available limit, you don't want to have a balance of $1,000 or more, or your credit score is going to tick down because the creditors are getting nervous because you're overutilizing your credit card. So we're already at 65% here, and that we've only shown 2 things here. So making on-time payments and only buying that pack of gum or filling up that gas tank or whatever, that is going to be 65% of your history, your score. And then length of credit history, this is the 15% here. This is just, it is what it is. Time has to go by, and there's nothing wrong with that. Your credit mix, this is 10%. So what they're talking about here is what type of credit do you have? Now, credit card is one type, and then maybe you have a mortgage. Okay, that's another type of credit. And then maybe you have a car loan. Okay, maybe that's another type of credit. And then do you have a personal loan that you're paying back? And let's say that the payment histories are all perfect on those, and the amounts that you owe on that, they're all going down, and they're all seasoned. Like they're all at least a year old or older, and you've made on-time payments the entire time. So having a credit mix is going to help your score. But you're looking at this now and you're seeing like, this is only going to affect my score by 10%. So it's not really that important. It is kind of important a little bit, but going out and getting an auto loan just for the sake of getting an auto loan is not a good way to increase your score. Those first three levels there, that payment history, the amount owed, and the length of your credit card history, those are the three things that are going to impact your score the most. And that just comes through discipline and just doing what you're supposed to do. And the very last one is a new credit. If you go out and if I were to go out and get a new credit card right now and they pre-approve me and everything's great, my credit score would immediately drop down because I went out and decided to get more credit. Now, that's how it is. But then a few months would go by and my credit score would go back up again because I'm paying it on time. My amount owed is not over 10%. And then my length of credit history is, all the other stuff is going to take over. But whenever you get if you're going from one credit card to two credit cards, expect your score to drop a little bit just because you went out and got new credit. Now, whether you think this is right or not, it is what it is. So how do you get started? How can I get the ball rolling? Well, go to your bank and get a secured credit card and make sure that there's no fees attached to it. There shouldn't be anyway. I mean, it's collateralized with your own money. There should be no fees. There might be like a opening fee of like, you have to pay for the card itself, and that's like $5 or whatever. I think that's relatively fair. But there shouldn't be any monthly or yearly fees with these associated with this. So, and buy a pack of gum and pay it off. And I know that's kind of a joke, but the purpose of it is that like, you don't have to blow up the credit card to make people think that you're a great borrower. Like $1, $2, $5, $10, like something small. It doesn't have to be, it has to be a minimal amount. Just whatever is that just shows that you borrowed $10 and you paid it back. And then you borrowed $10 more and you paid that back. And all you got to do is repeat it and just keep going until you hit that 4 to 12 month range. So guys, what do you think about this? This is the basic steps to get from a credit score of I don't have credit all the way up to 800. Did we answer all your questions? Do you have any other questions that we kind of missed in here? Are there any types of other videos that are related to credit that you'd like to see? What's stopped you in the past from reaching your financial goals? What types of videos would you like to see next? Please like, comment, subscribe. And if you're on Facebook, check us out at 9 to 5ers. We are here to make you smarter today and richer tomorrow. Have a good one.